Good afternoon, everyone, and happy Tuesday. It's Alyssa Corum and Ed Carson here with a look at the stock market today. We're going to go over the action for the major indexes, a bit of a disappointing close for the NASDAQ, Ed, and give us a preview of a couple of stocks that we're going to be checking in on today.
Yeah, Ali, we're going to take a look at Starbucks and NKS Instruments, a couple of stocks that did break out today. While Teladoc Health is an example of a stock that really hasn't bounced back over the past couple of weeks.
That'll be a great educational lesson for sure. And let's flip on over to the NASDAQ, which closed up less than 0.1%, while the S&P 500 closed down 0.2%, the Dow down 0.4%, and the Russell 2000, which had been one of the indexes rallying the most as of late, the hardest hit today, down about 1.7% or so. So first, let's start with the NASDAQ and then run through a couple of the other indexes. A disappointing close today.
Was disappointing, and it's too bad because there was also some actionable names that sort of came off of, a little bit, made them look a little less attractive. I mean, the NASDAQ's still in an uptrend. I mean, uptrend in the sense of rebounding from where it was. It's still above the 50-day line. It's still advanced. I mean, it wasn't great action. As long as we're holding above the 50-day line, it's not too concerning. If we rally tomorrow, we'll forget all about today. I mean, while today was an inside day and you definitely want to have an up day, it wasn't that bad all considered, and we'll just have to see how we go going forward.
All right, and now let's check in on the Russell. Tracking that is the IWM ETF. So down about 1.7% today after a pretty big hot streak.
Yeah, and I don't think it's too surprising that the Russell or the Dow pulled back, the Dow less so. But I mean, these were big, they had run up for several days. We were starting to talk about the Dow getting extended or getting close to it. So, I mean, you look in that context, those indexes don't really look that bad. And, most of the stocks in those sectors, yeah, they came down, some of those cyclical names, but not too much.
Yeah, so the speaking of the Dow, I guess about 5% above the 50-day. What levels should we be keeping tabs on for the Dow?
Chris was saying, Chris Kessel, our chief content officer, was telling me yesterday, was talking about the 6% seems to be what historically is an area where you start expecting higher risk of a pullback. And so yesterday we closed 5.5% up, and it had gone up so many days too. It wasn't just that, like day after day. So going down like a little bit like that is really not a big deal.
And just really quickly, last but not least, why not check in on the S&P 500 as well?
Yeah,
Do you still see the magnet to 4,000?
I mean, it seems like it, and it's holding above the old highs. It's well above the 50-day line. It really didn't go anywhere all day. It was just sort of mixing in between the Dow and the NASDAQ, and so it's doing just fine.
Okay, and now let's take a look underneath the surface, taking a look at Starbucks, SBUX. Keyboard a little sticky there, but Starbucks with a decent gain today, gapping up, closing up over 2.2%, heavy turnover, a little bit off of the intraday high, but still a really nice move for the stock.
That's right. Analysts over at BTIG, they upgraded this stock, gave it, I think, a 150 price target. The stock, it already technically sort of reclaimed a buy zone yesterday, and so it got above there. So that was nice, but you could also argue that getting above, the high from a few weeks ago was sort of another entry point. Maybe so, it really wasn't convincing yesterday enough, and today's high volume move, after yesterday's move. And that was nice. The reopening play, the numbers should look a lot better this year. I mean, at this time last year, China was closing down, was still closed, and we were starting to close. It was a pretty miserable time for Starbucks, but they've definitely bounced back. And so, this is one that maybe has some legs. You've seen that it's rebounded tremendously from the lows. We just weren't paying attention to it, honestly, for a long time.
Well, this is at least the first base showing up on pattern recognition since the turnaround. But a lot of these reopening plays have solid estimates, as you mentioned, moving forward. So we'll see if that can continue to boost Starbucks. And next, let's take a look at today's stock of the day, which was MKSI. So what's going on with MKSI here and this double bottom base?
Oh, a couple things. There's one, MKS was in this bidding war with a bunch of other companies for a laser maker Coherent, and it seems like they've given up. And so I think that was a negative that's off the table now. And this stock has bounced back. I mean, it bounced back really quickly. A lot of other stocks, and we'll look at another one soon, they haven't really come back quickly. This one had pretty violent little volatile moves, but it's back now. The volume came in finally. It wasn't actually that strong, I think, for a while, but it came in at the end of the day, so at least was above average. It came off its highs, but did close above the buy point. I mean, it's like that was pretty high in its range, a lot better than the NASDAQ. And the fact that a lot of other chip stocks are doing well, maybe not as well as this one today, but that's also can give you confidence.
And strong quarterly numbers as of late. And it also comes from a strong industry group. So it seems like a lot of chip stocks in focus right now.
Yeah, all of a sudden they sort of popped up. I mean, they didn't break down that much. And so then you get a strong rally. They're starting to come into play. Some of them were a little disappointing with the closes, but again, just have just a strong NASDAQ, more of a tailwind, and a lot of those might start flashing buy signals as well.
All right, a group to keep an eye on for sure. And now let's take a look at Teladoc, ticker TDOC. And this is not anywhere near a buy point, Ed, but it offers a pretty good lesson for investors. So walk us through this one.
Well, I mean, you can see this one is one of the last breakouts, that happened. It happened in January, and it looked pretty strong. It's actually broke above a handle, a little lower than that even. So it broke out there, had a nice run, but boy, it just gave it up all right away. And I think the real lesson is that, okay, it's sold off, but people say, well, that's okay. I'm going to buy it. I'm going to hold on to it. Or I'm going to buy it cheap because it's going to bounce right back. And I mean, yes, it's a little off its lows. I mean, it is off a little bit. I mean, it hasn't bounced back much at all. It's still below its 200-day line. While a lot of stocks may bounce back, especially if the NASDAQ comes up, not all stocks will. Maybe this one will, or maybe this will several months from now, but you can't count on every individual stock to bounce back.
Mhm.
And in the meantime, you're sitting on a stock in that risk. I mean, there's other stocks. If
Right.
if you had taken profits, you could have bought Caterpillar. You could have bought, one of these mining stocks or Starbucks. And all of a sudden, there's things out there that have been advancing,
Mhm.
rather than taking the risk. And, there's other stocks that have come up, but are still below their 21-day lines and 50-day lines. And it's just that those look better than Teladoc, but they haven't necessarily proven themselves. And if the NASDAQ rolls over, they will probably too.
Yeah. And so let's walk through where would have been a good time to get out then if you did buy in one of these spots that you pointed out there, Ed. It seems like on this day, this close below the 21-day line seems like a pretty good level to have gotten out. It was undercutting recent lows and again, closing below that 21-day line.
Yeah, that one would have been a place, I think, for sure to take at least partial profits. I mean, you might have taken partial profits on the way up too, and there's nothing wrong. Usually you end up, especially when things are getting extended, like if you do it right up at the way up or the way down, you'll end up sort of
Oof.
selling at the same place.
Right.
But that would have been a place to at least take partial profits, and maybe one way over the next few days, because it sort of undercut the 50-day line the next day, though it closed above it, and came right back down to the handle buy point basically that day. And 2 days later, decisively broke through the 50-day line
Hmm.
and the buy point. That was definitely a time to probably be getting out. I mean, you can see how sharp the selling was that week. That was
Hmm.
really intense. And you hopefully, if you take some partial profits, and then even if you were holding on late, but at that point you wanted to get out because you can see how it kept falling, and we're nowhere near back those levels.
That's
Yeah.
right. Yeah, I think that's such a good point because the NASDAQ had been pretty resilient in prior pullbacks, finding support at the 21-day line. I'll flip on over to the cues on the daily here. So maybe some investors thought, why sell? The NASDAQ's just gonna bounce back. And like you said, maybe it will, but that doesn't mean that all the stocks that you own will. And I'm just reiterating the point that you're making.
And actually, I mean, I know I didn't talk about this, but maybe if you look at the NASDAQ and go on a monthly, I mean, yeah, if you look back in 2000, we hit 5132.52. Oh, can't even go back that far. Okay, yes, we went down 80%. And yes, we bounced back eventually, but man, it took for a long, long time. And there's a lot of companies that you never heard of again. And
Mhm.
Amazon took a decade, Microsoft took forever to come back. So you don't know that they're coming back, and a lot of stocks just went gone. They're gone. They went 100% away, or were bought out for a couple of pennies on the dollar. So I mean, again, this is the pullback we had was nothing compared to 2000. I want to make that absolutely clear, but you just don't know. You can't count on every stock coming back.
That's right. And I think that's why the IBD strategies have really stood the test of time. There's a reason why we had these loss cutting rules and why we try to put the odds in our favor on the buy side by buying at the right time as well and not just trying to bottom fish.
Yeah, that's exactly right. I mean, because like you can get a big gain in an up rally, but then if you let it all slip away, you're back to zero or back to nowhere or down. So you want to make your money in the uptrends, then preserve your capital.
That's right. Okay, for more in depth discussions on what Ed and I are talking about, a great place to get more insights is every morning on IBD Live. That's our daily morning live stream where we go for the first hour and a half plus of trade, pretty much totally unscripted. It's a lot of fun. We pack in a lot of education and stock analysis in there. So we hope you join us if you haven't checked it out yet. And it's also important to highlight Leaderboard free access weekend.
That's right. I mean, we have a lot of great tools. Leaderboard, it has a really good performance, and we really, curate this list of really top performing stocks. And just to go back to IBD Live, tomorrow we have David Ryan as our special guest. And a couple of months ago when he first joined IBD Live, he really highlighted, hey, there's a lot of commodity stocks that are looking good. This is even before the techs had really rolled over.
Right.
And I'm curious if he's still into that, or if he's saying, you know what, I'm going to buy some of these chip names. I mean, because he's flexible, he is so good at this. He might have this whole range. I'm really looking forward to what he has to say now.
Yes, me as well. Decades of experience. IBD founder Bill O'Neill protege as well. Investing champion multi times. Yeah, can't wait for David Ryan to come on the show. So check it out. It's a great time to do so. Investors.com/IBD Live. Thanks for tuning in, everyone. We'll see you back here tomorrow.